So with that, let me ask all of you to join me with a very, very warm welcome to Sam on stage.
Thank you. Great job. Thank you, Kalia. Thank you. Well, Camelia, thank you for that wonderful introduction and the great year. Most importantly, the great year. 12% is good, 13 is better, 20 is actually even more exciting. Rabbits like things in decades, right? So I really am. I am pleased to be here today. It's been a couple years since I was in Singapore, 2009, and it really hasn't been that long, maybe a year and a half. One of the good things about the ASEAN countries, I've visited every one. So I've been in all of your countries over the past 20-some years. As you know, I lived in Tokyo for a while, so I've had the pleasure of visiting the places where you all live, and I really enjoy it. It's a great part of the world. In fact, it's one of my favorite parts of the world is Asia, of all the places I go. Wonderful people, great food, terrific weather, depending on the time of the year. But nonetheless, it's terrific. What I thought I would do today is a couple different things. I will talk a little bit about the Centennial, which Cordelia alluded to, but before I do that, I thought I would give you just a brief update on the last 2010 to 2010 roadmap, which we've now accomplished, which you've probably read about in the press. Where do we go next? That's the 2015 roadmap. We're 2 years farther than 2013, but if you compound at 20%, you'll do better than the projections. Because as I recall, if you go at 15% times 5, that's 100% improvement. So 20% times 5 is even more impressive. So compounding has a great leverage for the math majors in the room. And so let's really begin. I think, we'll talk a little bit about last year. It was a good year. I mean, it was another very, very good year for IBM and also for Singapore, ASEAN, and Malaysia, Indonesia as well, and in Vietnam. But if you look at it, we did about $100 billion in revenue. That $100 billion in revenue allowed us to garner close to $15 billion in income, up 10%. EPS, $11.52, $11.52, I should say. That's up 15%. Free cash flow improved by $1 billion year to year. And I think I should footnote cash. I know you guys talk about lots of things like profitable revenue. Well, why work hard to make nothing? So it's simple. Why work really, really hard the way you work and get nothing for it? And then if you get profitable revenue, you get things like cash. And why is cash so important for people that aren't in finance? Well, cash pays for your bonus. Cash gives you your increases. Cash funded the stock we just gave all the employees of IBM. All those things is cash. Without cash, you have a banker. You don't always have a friendly banker. Sometimes your bankers get in trouble. So we prefer to have a lot of cash and be our own bank. And it was a great year. But cash is really, really fundamental in any business is its cash and its balance sheet. Often not written about, but that's an economic fact of a country, of a business, of your own personal households. Without cash, you cut back in your budgets. Profit margins, again, were up. Good stories. It's really our 7th straight year of gross profit margin improvement. We need to continue that, and I'll spend some time on the implications of that. But you stand back, and it was record, record, record. So in a very mixed economic environment. Things did get better in the second half of the year, but it started out tough. So the important point I'd like to leave you with, 2 very, very tough economic years. IBM had its 2 best years ever in the history of the corporation in 100 years. So excellent performance. Given that performance, I often get questions from everybody, CEOs, government leaders, how? How can you guys, in this kind of a tough economic environment, deliver these types of results? We're the only stock of the thing called the Dow 30, the top largest industrials listed in the New York Stock Exchange. We're the only company that grew earnings every quarter for the past 32 quarters of the Dow 30. So what was it? You got to go back about 10 years. And in Asia, you know the value of long-term thinking, so I don't have to dwell on this like I do for my colleagues in America. 3 or 4 days is long-term in the United States. And if they've had a good weekend, it could even be less, right? Especially if their sports team has won. But fundamentally, if you go back, and I've been talking about this since 2002, and there's one of these things that's going to go down in the laurels of IBM history. It was the spring of 2002 at a security analyst meeting, financial investors in the IBM company. We stated that these 3 things were fundamentally going to happen. And of course, at that point in time, people thought we had lost it. Sam's lowering expectations. He's resetting the future. He really is off on a position that no one else in the industry is. But think about it now. It's so obvious, right? It's so obvious that the world would economically integrate. And that as countries, such as many of those in ASEAN and many of those in this part of the world and Eastern Europe and Latin America, as those governments decided to engage in the global economy for growth, that doesn't mean change their political persuasion. It just means engage in the free trading systems of the world and have their populations that were extremely well educated prosper in that expansion, that this would create a great opportunity for skills, wonderfully educated people to join the IBM company, and secondarily, obviously, to create economic opportunities because there's literally 200-300 million people entering the middle class. What do? Well, they buy cars, they shop, they get houses, they have mortgages, they want credit, et cetera, et cetera. All that goes on, all those things that we do. IT was going to change, and we made this statement at a time when everybody was saying that the PCs rule, that the PC computing model was it, everything else was dead. Remember, this is the whole mindset. And we said, nope, that this dot-com bubble wasn't a temporary thing. When the industry comes out of the dot-com bubble, it will be different than it was before. And it's not going to be PC-centric, right? That was yesterday's model. There's going to be billions of things, smartphones, tags, sensors. They are going to drive phenomenal amounts of information, and we're going to have to create an infrastructure that can support that. It would have to be resilient, scalable, horizontal, and secure. The next one, of course, was clients, and we said this, that clients would no longer want to be the self-integrator. Now, I'm not saying CIOs have all changed, right, and procurement departments have all changed, but we believe that as IT moved from the back office to the front office, that the customer would want the outcome and the value associated with that technology, not just to buy the technology inexpensively and assemble it themselves. And it was driven off of economics. It was a resource allocation exercise. You would have the choice. You could spend all your time buying stuff, slapping it together, and talking about how you're a great procurement guy and you got a good deal for, or you can create value for your company. And if you create value for your company, you and your company are going to do a lot better. If you do the other stuff, you'll be like the CIO rotation, which is every 2 years. Every 2 years, CIOs turn. Every 3 years, CFOs turn. Every 4 years, CEOs turn. I'm in my 9th year. So that's what we said. We said, this is what's driving it. And then the other thing that we did, which was quite unusual, we went to the financial markets and said, okay, this is the strategy, and now here's our financial model. And we're going to give you our financial model for the next 4 years. We did this, 06 was the baseline. We did it out through 2010, and we started at roughly $6.05, so we're going to do $10 by the year 2010. But we did $10 per share in the year 2009. We did $11.52, so we beat the low end, the high end, mid-size end, anything on that ratio. But it was a long-term point of view. Now, this is talking to an audience that considers the long-term 7 trading days around an earnings announcement. That's long-term. Very long-term is your next quarter. And we said, nah, we're not going to do that because we operate the IBM company differently. Here's our view. You can measure us. You can hold us accountable. Here are the elements of that. Now, of course, during that time frame, as you might imagine, we drove productivity more than we did top-line growth. It was a tough economic environment. I mean, we weren't going to get as much out of growth as we had planned in 2006, but nonetheless, we could get a lot more out of productivity by globally integrating the IBM company, and you know the story. But that's really what it was. It was all about the long term. If I go into a little more detail, pre-tax margins are up 3 times. Pre-tax profit growth compounded 16% a year. Cash flows up 3 times, obviously going with the margin expansion. I mean, you could throw a lot of superlatives around this chart. It's not necessary. Look at the bars. It speaks for itself. In any language, a lot bigger is better than little. Right? So phenomenal financial performance. And then you peel that back and go into the margin expansion, and what was it? Well, a lot of it had to do with the fact that we were moving into higher value spaces where we could get more profit for the work that we do because we could innovate. And you're not going to be rewarded for being like everybody else, ladies and gentlemen. We said in 2002 that this industry was going to bifurcate. And there are 2 ways to run your strategy. I remember making this statement. You can be really good and efficient in the supply chain, or you could innovate. You can invest heavily in R&D, drive unique value propositions, do things others can't do, and for that you'll get margin because people will pay for value. IBM, $6 billion of R&D a year. Even in a downturn, we didn't touch the R&D. They're the 2 models for this industry. But you could see, as you mix the value, as you change the elements of your business to value, the profitability you get as a result of that. Again, cash, I mentioned the importance of cash. We generated significant cash over this period of time. Over the 10 years, we gave $114 billion back to the shareholder, $114 billion US dollars in the form of dividends and share buyback. We also invested $75 billion back into the business. That's in acquisitions and capital expenditures. That's called service centers that Cordelia talked about here. That's what that is. Data centers and manufacturing facilities like semiconductors in East Fishkill and Burlington, Vermont, and places like that. At the same time, during this period of time, we spent $63 billion in research and development. $63 billion in research and development. That's why we get more patents than the entire industry combined. It's why we're more inventive than all the great, exciting startups out there like Google and Facebook and the like. It's because of the amount of money we continually invest in research and development. So it was a terrific run, and we got rewarded for that. Our earnings growth was 4th of the best of the Dow, and there were companies here that were going through a turnaround. These are percentage increases. So again, if you look at the largest industrial companies in the world, the bluest of the blue chips, we were certainly at the high end of the spectrum. To me, this is the proof point of thinking for the long term. Because all these companies would talk about they have a long-term orientation. These are the best of the best in the value of long-term thinking. The model, investing in research and development. You don't know what the payback will be, but sometimes you make these bets. Other companies cut back their innovation to try to make a quarterly statement. That's a 90-day cycle. Employee development. All the things we do as far as growing the talent pools of the IBM company. All long-term oriented. Market access, market entry. Early in the countries like China and India and Vietnam and places like that. Early in, opening cities, your city expansion strategy. Well ahead of the trends. You don't want to be late. You always want to be ahead of the trends. And you take some risk. Governments aren't always stable. It's obvious today if you just read the newspaper. Not everything is perfect. That's why they're called emerging markets. But nonetheless, at the end of the day, through thinking about the long term, making those kinds of investments, it is rewarded. And it is rewarded. And you can look at their stock price today, as you might have noticed, 165 is a 100-year high for a 100-year-old company. So if you own our stock, in fact, everybody does now, since I just gave you all $1,000 worth of it, right? Think about what Cordelia called profit, revenue with profit. Because there's a lot of revenue with no profit, and your value is half on more revenue. So it's important what you measure yourself upon. So, great story. Now, where do we go next? Again, this is now 2010 through 2015. Pretty big, bold numbers up here, going from $10 a share. Again, that was the baseline. to $20 a share. Another 100% improvement. $20 a share. Big numbers. I mentioned in the previous roadmap we had to rebalance revenue for productivity because of the nature of the economies. Well, that's all behind us. Things are improving. Clearly here you see it in the economic outlook. I was in India the past couple of days, 8.6, 9% kinds of growth. You see it in China. Fundamentally, it's more oriented around growth. We call it 4 plays. You know these plays. It's like they're in your 2013 roadmap. In fact, I could tell you our plays and your plays, but since you know your plays, I won't bore you with that. I'll talk about the IBM Corporation's plays. Growth markets, you're here, you're living it. That means you have to keep going. In the early 90s, it was 12% of IBM's revenue. Last year, it's 21% of IBM's revenue. In the roadmap, it's more than 25% of IBM's revenue. That means you have to continue to grow around 20%. That's GMU. That's just the math to get to 25% of IBM. If you look at the past several years, GMU has outperformed the major markets by 8 to 10 points a quarter. Every quarter, 8 to 10% more growth. So continue the strategy, open up the branches, leverage the skill, push innovation, be ahead of the trend. Smarter cities, be ahead of the trend. Don't trail the trend. Because everybody's out there is going to try and copy us. Do not trail the trend. Which means put the people on the ground, develop them, get them wherever you have to get them in IBM to these opportunities, or go hire them. Do not trail the trend. Cloud. Cloud's the smallest thing on everything in this chart. I know it's the most, if you measured it in media words, it's the biggest thing in the industry. If you look at an economic opportunity at IBM in the roadmap, it's the smallest. You decide what's more important to you. We are focused on cloud, but we don't measure IBM on words, right? We measure IBM on this chart called $20 a share. So, but there's 2 focuses here, and there's a lot of distortion in the cloud. There's the consumer-oriented clouds, and then there's the enterprise private clouds. We will sell our technologies to tons of people to enable the consumer cloud. In fact, you're doing that with telcos here. There's a lot of work underway that you guys are leading. Get that core technology, let them establish a platform. Let them go pursue that marketplace. It's a good marketplace, and they should. It makes a lot of sense for them. We're an enterprise company. We've always been an enterprise company. It's about private clouds. And if you look, we got many offerings out last year. If you watch signings in the second half, once the offerings were out there, they're off the charts. On a small base, but off the charts. And a lot of it has to do with, as you know, development test, social collaboration, social media, office clouds, storage kinds of environments, all about, quite honestly, running the infrastructure in a more secure and efficient way, which has a lot of short-term payback. But it's more than VM and VMware. It's more than kind of virtualization. As you know, it's an end-to-end view of how you optimize your resources, and it gets a lot back to the application and where it fits. But it's an enterprise perspective. Good opportunity and fast-growing opportunity, but as I said, just small relative to the others. But we are leading, and we want to continue to lead in cloud, so just keep it all in perspective. Analytics. Growth markets and Smarter Planet kind of get subsumed in analytics. Analytics is huge. Analytics is huge. Analytics is huge because it touches everything that the clients care about. Everything that they care about. Society, congestion, road charging systems, public safety, fire, clean water, analytics, credit card risk, healthcare fraud, systemic risk in the financial system, all based on analytics. Big data, massive amounts of data. CRM, real-time pricing in retail. On and on and on. It's all based on analytics. Smarter Planet, again, is a lot of the examples I used are Smarter Planet examples. A big opportunity in cities which are pursuing, and cities will approach this in multiple different dimensions, where they can build a green field, like in India or in China, where you're going to go build 25 or 30 greenfield cities. You can certainly take a systemic end-to-end point of view and put an architecture in place and build the system of systems. However, where you are in a city that exists, you take elements of that, and it varies by priority, whatever it happens to be. But a tremendous opportunity around Smarter Planet. And it also allows IBM to connect with what people value. And the last one was make IBM a better IBM. We drove $5 billion of productivity in the 2010 roadmap. There's $8 billion of productivity in this roadmap, and all it means is we have globalized, we have integrated, now we're going to simplify. benefits $8 billion. $8 billion. That's a lot of revenue. Just by sharing, simplifying, working as one IBM. And we will do this. But just like we got the other 5, this is hard work, but we're well on our way. So, now I've kind of walked through some of these things. Cordelia did as well, so I'm not going to repeat myself about the importance of your role in the strategy. You are GMU. You guys have got to drive industry performance 2 to 3 times GDP. Outperform the market. Right? And in a lot of these spaces, we're making the market. We're making the market. We're going to go for the growth. We've invested heavily in the GMU, heavily. As you know, several $billions. We need to continue to drive the growth. But key to that, set the priorities, which you've heard from your boss. Execute those priorities. I'm going to add one thing here. The only way you're going to differentiate IBM on this chart is you're going to have talented people on the ground. This is talent on the ground. Smarter cities, analytics, cloud, application architecture, cloud, not virtualizing Intel servers. That's mindless. But optimizing the application infrastructure, this takes real skill and real talent. And that's what differentiates IBM. So I just ask you, and you think about these plays, build your skills. You can't fly them in from whatever lab and have them fly out 2 days later and wonder why you can't deliver the project. You need to have the talent on the ground. And that is all the countries that you operate in and all those cities. You're not some zip code someplace in New England in the United States that they call in once in a while on a Skype phone and say, how you doing? You know, right? It ain't going to work. So, 2011, phenomenal year for IBM. Phenomenal year. A century. A great birthday. You look at tech, there's no one made it 100 years. You look at the companies that were 1900, were on the Fortune 25. There were only 2 left in 1961. You look at those Fortune 50 companies in 1962, there's only 4 left, and one's IBM. Only 3 survivors. It's a huge year, but it's a huge year to point out to our constituencies why. Not just celebrate and have a party, but why? Why has IBM been able to last 100 years through all these technology cycles? What has it been about? What are those capabilities and that culture that drove this centennial at this point in time? And how do we take that to the future, i.e. Smarter Planet? But we're going to have this occasion to explain to the world who we are. Because there aren't 100-year-old companies. There are a couple natural resource companies, there are a couple Asian trading companies, but there aren't many. In tech, there's nobody. Nobody. Every time there's a big tech shift, boom, they get wiped out. Or they sell themselves and move on and do something else. It's just great for a short period of time, not 100 years. 100 years. So we're going to have this great engagement. We're going to have the capability to explain to all of our people the 100 by 100 video and all those sorts of things, to talk to all of our client base. But the important thing is to show what we've stood for over those 100 years. You know, getting ready for this, some of us, including myself, trying to thought about is there one thing we could use to describe IBM as 100 years? It's about 3 dimensions. And mostly it's a culture of long-term thinking. But it really is about pioneering the science of information technology, creating the modern corporation, and making the world work better. You think about the science of information technology. I mean, cheese slicers were one of our premier product lines. Cheese slicers. I know, it's incredible. And time clocks. Phenomenal. I guess a cheese slicer has some computational capability because you have to measure the width of the cheese as you slice it. You know, that was our original business model. And we were services-based. Carts went around with replacement cheese slicers in the back and sold them that way. True story, by the way. And we moved through multiple things. And then you talk about, you know, typewriters, Fortran, fractals, PCs, supercomputers. analytics, voice-activated systems, services, on and on and on. It's just a blur of advancing science. We invented all these things. The disk drive, solid-state memory. We invented everything. VM. People talk about VMware. For the old people in this room, we were trained on it 38 years ago. All right? Modern corporation. You know, we started in one country. We went to Canada as a sales office, and Watson changed the name to International Business Machines because we opened a sales office in Toronto. Put our first plant in Brazil, in Rio de Janeiro in 1917, and on and on and on. You know, phenomenal story. Created the modern corporation, but we're progressive in what we've done in the workforce movement. Hired our first disabled employee in 1914. Equal pay for equal work for women, 1930s. We had equal opportunity before any government had a law, 14 years before. No genomic testing or personal IDs. In 2005, we said, nah, it's not going to have any impact on employment practices in IBM. So a history of doing these things. So the year is about to begin. Phenomenal year. In fact, it started with centennial lectures. I gave the first one at my university in Baltimore called Johns Hopkins. They have a lot of affiliations in Singapore. For those of you who don't know Johns Hopkins, it's a niche school. We train doctors and physicists. If you're not going to be a doctor or do a Mars mission, you probably shouldn't go there because it is a tough place to survive. But if you do, and you're not a physicist or a doctor, you do what I do. You go into business. Anyway, so of my roommates, I'm the only one that's not a doctor. The next one here is, you go through, and that's the Centennial Series. The event is actually June 16th. We'll have a couple days before where we ask all the employees to give back their time, a couple days of volunteering to whatever your goals are, whatever your causes are. Let's all do that, 420-some thousand IBMers around the world, to give back to society, which is what IBM has always stood for, is giving back. We should all do that. The other thing that's just happened, which you can watch on TV, and I know Jeopardy probably isn't a popular TV show in this part of the world, but what it is, it's sort of like the old-fashioned version of Who Wants to Be a Millionaire. And by that I mean, instead of answering the question with an answer, you're given the answer, and you have to come up with the question. It's been around. It's the oldest game show on television. We have a machine called Watson. I'm sure you've heard all the excitement. Watson competes against the two best to ever play the game. The one guy won 74 in a row and never lost. We'll see how he does next week. And the other individual won $3 million and lost to the guy that never lost, Brad and Ken. Now, the thing that's incredible about this system has to hear natural language, although it's entered, but theoretically hear, correlate keywords, calculate the question, not the answer, in less than 2 seconds, then the odds of that being correct, and then in less than another second hit the buzzer, which allows you to answer, because when you're playing against the two best guys in the world, they know they're right 80 or 85% of the time. They just hit the buzzer. They just go for the buzzer, because if they're in, they know the majority of the time they're going to be right. And Watson has to beat them in to have a chance to even answer with voice and natural language. Give the question, and then pick the category, and then bet in double jeopardy, and calculate the odds. All this through natural voice, puns, metaphors, natural language. Phenomenal machine. P750, Power 7. DB2, Hadoop, big data, standard stuff. And 25 really smart people in IBM research that have written the algorithms to make this thing scream. It's going to be incredible. Now, the point of that is that will set the tone for what the Centennial is all about, because it will, on television, with millions of people watching, is going to open up the world's idea of what we're talking about in a smarter planet. You're going to see something that, if you're a lay person, you cannot conceive of. How could this system interpret natural language and all its subtleties and compete with the two best ever human beings? How could it do that? So then the question becomes, how does it apply? So I go back to Smarter Planet and Smarter Cities. How does it apply? Think about the problems of cities. I gave this lecture at Hopkins, and I talked about this, and then one of the med students there wrote a blog. It turns up in the newspaper saying, you know, this could take all the errors out of the healthcare system. So, what do we have going for us this year? Simple. Great momentum in the business. I mean, really, 2 record years, all-time high stock price. Doesn't mean this, but it creates a glow. I mean, we all understand you're not as good as the press clips, and you're not ever as bad. Just it creates a glow. We have a point of view that's very simple and it's differentiated. And the key to keep this going, as Cordelia said, she said it, is we have to execute. You got to execute. You have to win because your results are your winning. So, tremendous momentum, great people, great set of products, strong point of view, a platform called the Centennial where everybody's going to be watching us. So let's build a smarter planet. Thank you.